I would like to welcome everybody to this little episode. I have invited Ryan Larussa to join me and give you a quick update this week on what's going on in housing and mortgages. One of the first things is that mortgages and homes are both very affordable right now. We are in one of the best recoveries for housing that we've seen after the deep COVID dip. Sales have just picked up and boomed, and partly a pent up demand and partly driven by a phenomenal mortgage market that we've never seen in my lifetime. So I've invited Ryan to come in today and tell us just a few things about this particular time in the mortgage industry. So Ryan, you want
Thank
to?
Yeah, thank you so much. Thank you, Miss Ann. I appreciate it. I know, first of all, thanks for the opportunity just to share a few thoughts. Super thankful for your leadership in the industry, and as long as you've been doing it, I know we've had a great partnership. Uh, I guess the first things first. Let's just talk about where rates were 1 year ago, which is hard to believe. Rates 1 year ago were 1% higher than where they are today. Okay. And people, I always like to equate that to, okay, Ryan, well, what does that really mean? In dollars, that means that's about $30,000 more of a house that you could buy by having a 1% lower interest rate, which is incredible, right? I mean, that really is just mind blowing to think about. I know we all 3 or 4 months ago, when COVID first really kind of came about, I know this is my 20th year in the business, as we were just talking, and I was a bit freaked out. I've been through a lot of hurricanes. I've been through a lot of different natural disasters, the flood of 2016, lots of just wild stuff, and it shook our market for just a brief moment. But we are at a time right now that where, because of rates being as low as they are, I know you see that on your side, multiple offer situations again, very limited inventory, lots of people buying. What I found is a lot of people have sat in their house for the past 3 or 4 or 5 months due to COVID, and now they've realized, okay, I could go buy another house, put this house that I'm living in, I've gained great equity, and go buy another house and come out in a fantastic spot. So rates being as affordable as they are at this particular point has allowed a lot of people to increase their buying power drastically. $30,000, matter of fact, year over year.
Right. So what are the rates this week, Ryan? Just give us an idea.
Yeah, idea of rates right now. We're middle August. Seeing some stuff on 30-year loans with people with great credit, high to low 3% range, which is incredible. I know when I got in the business 20 years ago, if you got a 7.7, 7.8% rate, that was a great rate. And now we're
Right.
talking about that, and even 15-year money in the low to mid twos, low 2.25, 2.5%, which is just absolutely unbelievable.
Unheard of. Now, someone told me they may be going down a little more. What are your thoughts on that?
Yeah, so we've heard a lot of rumbles on, okay, what's going to happen? And the truth be told, right now, it wouldn't shock me. I think that there's going to be some part of a bottom at some point. The stock market, as we all know, has been very volatile. So money's going out of the bond market very quickly and then back into the bond market, which drives rates kind of crazy. Our job right now is to kind of help mitigate the fears and whatnot. But here's what I tell all my clients: if we save you an eighth or a quarter on or a percent on rates, fantastic. But as good as rates are right now, let's focus on the appreciation and where you're going to be in 2 years, 3 years, 5 years. Because when you look, and you and I know this because we look at numbers daily, but when you look at the amortization of what you're paying now per month and how much money is actually going towards principal versus interest because of the low rates, it's unbelievable. I was just visiting with a first time home buyer just a few minutes ago before this call, and we started walking through those numbers of what they're paying in rent and what they could actually own a house for. They're paying almost $1,200 a month in rent. And when we equated that to, that's about a $200,000 to $215,000 home purchase, it just totally blew them away. And then when I showed them how much money of that payment per month would actually go towards principal versus interest, you know, that was the deal sealer. I mean, they were just like, Ryan, okay, let's go. We're ready to start making this a reality. And that's the fun part of our job, whether it's the first time home buyer or somebody looking to downsize or upside. Right now is the time with rates where they are. Could they go a little bit lower? Sure, they could. But where they are today is absolutely phenomenal. And this market is really, 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 really strong in a lot of different places. I know I've been a part of some open houses in the last couple of weeks. And if that house is priced right, it's moving. It's moving.
Well, I had one near the Highland Road area, LSU campus,
Uh-huh.
and we just put it on the market. And less than a week and a half later, we had 5 multiple offers. So I think for sellers, if you're thinking of moving, you're not in your dream home.
Right.
COVID's going to be a reality for a while. We've seen predictions, but to totally recover job wise and economy, they're looking at the 3 to 4 year period.
Mm-hmm.
So this new Zoom room stuff that we're doing and homeschooling may be around for a while. So I see people wanting to have a little extra space so they can come in and actually create a home office that's a little more friendly than the bedroom closet, for instance. And
Right.
so that's a factor. And now with rates as it is, it's phenomenal. So if there's a
Absolutely.
person looking to sell a home because they want to change features or want to be in a different area, this is absolutely the time to list. And also, even though people tell me, well, what if I buy high? One of the things that you have to consider, even if you buy a home now and you have to pay the top of the market dollar because there's not a lot of inventory, you're still better off at a 2.8% interest rate than 4% in a year and a half or 2 years. You can long term in that 3 to 5 year period collect more equity, even paying 4 or 5 thousand more. So it's pretty great time both ways around, whether you're buying or selling.
Absolutely. What are you seeing on your side this in the last month? How are things going in your market?
Well, what I see in our market is people really ready to buy. I see buyers that were pent up and cooped up, and now they're not as afraid. There are
Right.
certain factors. The jobs are coming back, especially here in Baton Rouge. We're very much the entertainment, the restaurateurs, and that was the biggest job gain on last Friday. It
Right.
had, like 70% of the job growth. So
Right.
that was a wonderful thing for Louisiana. Uh,
Absolutely.
so now then I tell sellers, don't sit and wait. It's the time to go ahead and list. I'm also telling people, if you, for some reason, need to stay where you are, then you need to call Ryan right now and get a refinance because there's
Yeah.
never a better time to do that either. So if you're not going to buy to get a different style house, then refinancing is definitely, this is the time. Would you agree?
I would absolutely agree. I mean, it's the time. Anything, which is hard for me to even say. If your rate is above 3.875% right now, you need to call me and let us just take a look at it. It won't cost you a penny. We'll look at the opportunity. If it makes sense, great. If it doesn't make sense, I'll tell you stay right where you are. But looking at it right now, I think you're going to look and see that there's a great opportunity for you to save some money and some interest per month for sure.
Right. And we got some news today that the National Association of Realtors declared Baton Rouge the best city in the whole United States to buy for an affordable investment. So they predict that our rates are going to go up. I mean, home values are going to go up very, very steadily over a 10-year, 5 to 10 year period. So there's never a better time to invest in Baton Rouge real estate.
Yes, indeed.
So any other comments right now that you'd like to add, Ryan?
I'm good. If you need any help, anybody needs anything at all, please pick up the phone, give me a call. My number is 225-214-5153. Again, that number is 225-214-5153. Or just contact Miss Ann. She'll be happy to put us in touch.
Okay. Thanks again for joining us and giving us some of your valuable time. And I know now, especially most of us in the industry are sort of overloaded. I mean, all of a sudden here, it just the pipeline opened up. So I just ask everybody to be a little patient with us because we're running as fast as we can to get all this done. Thanks,
Amen.
Ryan.
Amen. Thank you so much. Good seeing you.
Okay, bye.